Hello, everybody. Welcome to Thursday. The S&P 500 was down 1.2% today. Kind of amazing, actually. If you look at what's going on, the gross domestic product, which is the broad measure of our economy, grew 4.9% for the quarter, which is a really big number. When things are going really well, we generally hit around 3.4%. We haven't seen anything like that for a while, actually. So, we have great consumer spending is the big driver there. Amazon reported after hours, and they had a 13% gain for the quarter in their revenues, $143 billion in sales. You've got companies like Microsoft, Meta, all beating their numbers. Intel reported after hours, they beat their numbers. Things are really good, and the market is coming down. So there's really only two explanations for that. One, in an environment where inflation is higher, when things get really good, there's a concern that the inflation might not be coming down. So we'll have to be watching for that and see how that plays out. And if it doesn't come down, then the Fed raises rates more until maybe they raise them too much, and then maybe something breaks. So that's one issue. However, so far we've seen inflation continue to come down, even though the economies continue to improve. Hopefully that pattern continues. The other thing, of course, is with Israel in a situation, maybe a ground assault that might be coming. Oftentimes, you'll see the market pull back. Sometimes when the ground assault starts, the market will take off. But I think, there's obviously some concern about contagion and other, countries getting involved and what have you too. So, we'll see how that plays out. However, if you look at the market and you look at what's going on, if you look at the earnings, and I'm seeing a lot of articles talking about how the earnings aren't that great. They look pretty good to me, honestly. And I think it's just a scenario where, good news is bad news because it's inflationary environment, and what's happening in Israel has driven us right down into, the middle of this support level that we have. We're at 41.37. Now, 41.37 is kind of an important number. It's what we closed at today. That is exactly a 61.8% retracement from our lows that we set back in March. It's another really big retracement level that gets a lot of support sometimes. So we'll see how that goes. So I know a lot of things are lining up, especially with the reports after hours from Amazon and Intel, where we could see some bounce tomorrow because we're, the RSI, which is the relative strength index that I use on a 14-day basis, is stretched all the way to 30. Almost every time it gets to 30 or a little bit below, we see some type of a rally coming too. So let's see how this plays out. This is all part of the normal, retracement back down. We went too fast from 4,100 to 4,600, and now we kind of retracing that, filling that back in. We could fall below this. We'd have to deal with that. We get more conservative, but the 50-day moving average is still above the 200-day moving average. 200-day moving average is still going up. So we're still in an upward trend at this point in time. We're just getting closer and closer to a downward trend, but that doesn't mean we'll actually end up in a downward trend. So we just have to let it play, because when we do get a bounce, if we have one, it's going to come very quickly and very hard because things are oversold. So you kind of have to hang in there and watch that bounce come with the money. And if it doesn't come and we fall below the bottom of support level, then, we'll start to get more defensive, and we'll deal with that too. But this is just part of the game, of being an investor, kind of dealing with what's going on in the stock market. So look forward to seeing you tomorrow. I have my show, Talk Money with Tom. Going to do a summary, got some good charts actually to talk about and look at what's happening, this week. At the very beginning of the show, I do a nice summary. So please join me. You can ask some questions live. Love to see you then. Talk to you tomorrow. Thank you.